Well, let's get across the market open now. Jessica Amir joining us from Moomoo. Jess, happy Tuesday to you. Now, of course, locally, we don't have a lead from Wall Street or the UK, both those markets on holidays overnight.
Yes, eyes wide shut from some key markets, but we do have positive leads setting, I guess you could say, dulcet tones for markets. Perhaps a little bit of confident bullish tone could come today. We have seen Canadian stocks also, Andrew, hit record all-time highs, so that's pretty positive. Of course, a large part of their market, key commodity players, quite similar to those down under here. So lots of gold miners really ruling the roost there. European stocks, Andrew, also nudged up overnight, so that sets up another positive lead to follow. Their market, Andrew, is now just under 3% away from record all-time highs. And thanks very much. Their market is actually up 11% this year. Would you believe? Just really interesting to point out that banks and chip leaders are leading the charge up there. And that's, of course, on the back of what we reported, or we all covered yesterday, Trump basically kicking the EU tariff extension down the road. Plus, I also think it's really worthwhile pointing out that we're continuing to see the death, a very slow death of the US dollar. So that is quite supportive of risk-on currency markets. So those other key currencies are doing well. And that also means industrial commodities, Andrew, they've got the green light to nod on up. So all those key industrial commodities that are needed in the AI build-out, aluminium, you say aluminum, I say aluminium, also copper, nickel, silver, they're all higher. Basically, I think it suggests a full steam narrative risk on fueled by AI rally.
Yeah, interesting. Just as you talk about the demise, certainly in the meantime, of the US dollar, we heard from Christine Lagarde from the EU overnight talking about, well, now's the chance for the euro to step in where the US dollar's faltering.
Yeah, absolutely. Yeah, and that has reached a key level overnight. In fact, records to some extent. So it is really worthwhile pointing that out. I also think we need to pay particular note to those defence stocks in Europe that have also been leading their market higher, gaining significant foreign investment as well. So that really does need to be said, particularly as Ukraine-Russian tension is now picking up again, Andrew. We really need to start paying attention to those European companies, but also, as you said, the FX markets themselves in Europe. But closing it all off, I think it is worthwhile to also see the US S&P 500 futures. They're up by 1.2%. So I think that's pretty exciting. And I think lots of people, Andrew, might also be waiting to see what China announces because China has said, I guess, that they're preparing their 5-year plan and what that could look like when they map that out in 2026. Of course, they're really planning to revive, boost China, the made in China philosophy, that notion, and they're really looking to drive semiconductors and new energy for the next 5 years. So anything in this regard that comes out of China will be looked at very closely, and commodity investors will be loving whatever they hear. I'm guessing it's going to be pretty good.
Now, in fact, later this week, the focus in the US corporate-wise is going to be very much on NVIDIA. What are the expectations there?
Well, they're pretty lofty as always. Last time they were so lofty, they actually disappointed, and shareholders were whacked and their shares got clobbered, falling 8% after they reported results, despite missing on what we call the top and the bottom line. So they missed on nothing, but it just shows you how much, I guess, expectation there is for the world's biggest or second biggest company in the world to deliver another earnings blowout. But it has to be said, they have delivered 4 straight blowout earnings reports. But the options market, Andrew, is suggesting that we could see their shares swing in either direction and rise about 7%. I do really think it's important to see if we do see them actually roll out this AI cheaper chip for everyone. That'll be a game changer. The other thing that's going to probably be mapped out is what we saw from Oracle just a day prior, announcing that they're going to buy something extraordinary like $40 billion NVIDIA chips. I thought that was a typo and I had to reread it, but that's just exceptional stuff. It's not just Project Stargate, that is Trump's pin-up AI project to really future-proof the AI tech hub in the US. It's not just Project Stargate that's underpinning NVIDIA's long-term strength, but I think what is also underpinning its strength is the new foreign investment, which we've never seen ever before in a company of this magnitude. So we just 2 weeks ago, we had the UAE making one of the world's biggest investments in a foreign company of this proportion. And we also had several weeks ago, Taiwan also increasing their investment with NVIDIA. So lots of really positive things are to come, but I think we do have to remember their shares are volatile, Andrew. So you've got to really trade with caution here. But the good thing is their shares have always historically recovered from market crash. The reason for that, a couple of things: 50% of their clients, they're obviously blue chips. We all know that. So Microsoft accounts for 19% of NVIDIA's orders, 10% of NVIDIA orders from Meta, SMCI, 6%, Alphabet, 5%. The list goes on and on. But we are also looking to see more breadth be added. So we're looking to see international healthcare companies added to the makeup of their clients. And I think that is really exciting. And it really goes to show that as investors, we really need to start sitting up and taking particular attention to this company, because we know that it does make up also a fair chunk of the S&P 500 and also the NASDAQ 100 as well.
Yep.
In fact, it's about 7% of the entire market, Andrew.
Well, talking of companies that make up a chunky part of the market locally, CBA, of course, continues to defy certainly the brokers there. Jess, what's your view on the largest stock?
Yeah, so I'm extremely contrarian. So I don't think anyone in the Australian market will be telling you this, but I started telling our clients this, that some of the smartest moves in financial markets are often the simplest. We don't need to pick penny stocks, we don't need to chase penny dreadfuls, but we can simply look at buying Australia's biggest banks and taking a long-term view or trading them. And every single broker out there in Australia has got CBA as a sell, but each of the 6 pullbacks that CBA has had over the past 2 years, Andrew, pullbacks of 7 to 15%. Each and every time CBA has recovered and hit a record all-time high. This time, I think that more upside could be coming to the swings, potentially from CBA, and that's for a couple things. Couple reasons. We've got FOMO in the Australian property market, and that is basically thanks to Labor, I guess, strengthening their first home saver support. So we all know that. But what is really interesting is that every single market crash, CBA has always recovered. So if you bought CBA at the last time it fell 15%, you would have made a 22% in a month, just if you bought into the pullback and held as at a couple of days ago. So simply just showing you, if you buy Australia's biggest company that makes up 11.1% of the index, you can really fast track your wealth creation.